Okay, so the problem 4-3A on page 217. What we have is we've been given a unadjusted trial balance of various accounts, along with the data to make four year-end adjustments. So we're to enter the unadjusted trial balance on an end of period spreadsheet, and then we're going to need to add accounts for wages payable, depreciation expense, laundry supplies expense, and insurance expense. And I've done all of that here on the worksheet tab. So the first adjustment is laundry supplies on hand at June 30 are $8,600. So adjustment A, we have an unadjusted balance of $26,500. $8,600 are still left over at the end of the period, giving us an adjustment of laundry supplies used up during the period of $17,900. And that is going to be laundry supplies expense. Then item B, insurance premiums expired during the year are $5,700. So this is the same sort. This is a deferred expense. It gives you the amount this time, nothing to calculate. 5,700 then becomes insurance expense. Depreciation of laundry equipment during the year is $6,500. So item C tells us the amount, $6,500, and the offset is this contra asset account of accumulated depreciation for the equipment. And then lastly, wages accrued but not paid are $1,100. So we have wage expense. This is an accrued expense. The other three were deferred expenses. So accrued expenses are $1,100. That's the income statement account. And we have wages payable up here. Oops. 1,100. Splitting these between the two income statement accounts starts at revenue and then includes all the expenses. And we didn't need this. Advertising expense. Must belong to a different problem. And in the problem, it gave us a check figure that tells us net income equals 10,700. And sure enough, the difference between the sum of all the credits, the revenues, and the sum of all the debits, the expenses, is 10,700. And that's the difference between the two income statement columns. So now we're going to do an income statement. So this is Epicenter Laundry. This is the income statement. And for the period, year ending. June 30, 2016. Revenues consist of laundry revenues, and its adjusted balance is $232,200. Then we have operating expenses. And they consist of this wage expense, really all of them, wages on down to miscellaneous. So there's 7 of them. And we can total those up, pulling, and as you can see, I'm pulling not just the numbers into the income statement, but I'm also pulling the words. So there's the total. We can make this a little bigger so that we can see all the depreciation expense. And then total operating expenses was this. Put a line underneath that. And subtracting the 2 gives us our net income. And that's the income statement. Statement of retained earnings. We have the same name of the company, same for the period ending. And this is the statement of retained earnings. Retained earnings on July the 1st, the first day of this fiscal year, is going to be, retained earnings is right here, $65,600. To that, we're going to add net income, which we just calculated at 10,700. Get a subtotal. Less dividends. That's here. And gives us retained earnings. On June 30th, 2016. And that is the end of the statement of retained earnings. Then we have the balance sheet. This is as of assets. Current assets in a classified balance sheet. That consists of cash, let's put it over one more, And there are 3 current assets: cash, laundry supplies, and prepaid insurance. Sum that for total current assets. And then property, plant, and equipment. Consists of 1, which is the laundry equipment, and then less the accumulated depreciation on the equipment. Let's make that a little bigger so that that all fits. So we have laundry equipment of $232,600, and then accumulated depreciation, adjusted accumulated depreciation of $131,900. Actually, I can move both of those over here. Make that a little smaller. No, too much. There we go. And that gives us total assets of $124,200. Liabilities consists of the accounts payable. Actually, this is current liabilities. And the current accounts payable balance is $11,800. We have one other, which is the wages payable, for a total and then we have stockholders' equity of common stock and common stock totaled 40,000. And retained earnings we just calculated at 71,300, and that is total stockholders' equity and then total liabilities and stockholders' equity of the same 124,200. So that's problem 4-3A on page 217. I will post the beginning, the start, as well as the solution, and you'll be able to, I'll post the start you've got a video here of the solution. So the start will be online and you can work your way through it. All right.